Welcome to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. Whether you're watching us live on YouTube at TradeEZ or listening on your favorite podcast platform, we've got you covered. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Hey everyone, I'm Stephen Kalayjian and welcome to the Bull, the Bear, and the Ugly. All I have to say is what a day. Unbelievable patterns. So many people, I am just so pumped up how many people really are getting this. They're listening, they're watching, I'm teaching, I'm guiding them through the day, and the patterns are just absolutely Picassos across the board, whether it's Avago, whether it's the S&Ps, the NASDAQ futures, Coinbase, MSCR, Microsoft, the diamonds, the ETFs. It doesn't make Meta. The volatility is here and the moves are insane, right? I am telling you, I've been doing this now close to 42 years. The moves are insane. We caught the most unbelievable buy divergence at 130. I will show you this pattern. The S&P futures, I said to my friend, buying between 55.30 and 55.50. Boom, the low is 55.34. Kaboom, they rallied to 56.43. They rallied about 109 points off that low. And then at the end of the day, they go from 56.43 down to 55.75. Come on, you can't make this up. 109 up, 168 down. All right. It's just absolutely insane. Remember the commercial Crazy Eddie? It's absolutely insane. That's exactly what's going on here. But guess what? We all love this volatility. Me, I love it. I eat it up. It's the greatest in the world. I'm shorting Qs and they're dropping $1.50, $2. I'm shorting the S&Ps. They're dropping $20 on the spiders. Avago, you short Avago at 94.5, 95. You blink, boom, it's below 93.5, 93. It's just absolutely crazy. But again, most important thing about trading these crazy markets, you have to have your stops in place. You have to maintain discipline, and you have to be able to really keep. I had said this to somebody yesterday. We were shorting Apple and it dropped sharply and it dropped like about $1.10, $1.20, maybe whatever. And then it ricocheted up 40 cents. And the person said, damn, I couldn't catch the lows. So normally I say, if you're shorting like that, you got to put the bids in ahead of time. And, and I said to the person, you got to keep your hand on the mouse, right? And they were hysterical laughing. But, in these type, I don't execute. I have other people execute for me because I can't look up and then look down, look up and look down. I'll break my neck, and I don't like touching the execution piece anyway. So, but with that being said, another great day. So many people in my community here just really knocked the ball right out of the park. So let me stop talking and let me show you the best patterns of the day here. So basically, first of all, let's look at Tesla. Now we know how deeply oversold Tesla is, right? So when Tesla got this pushed down at 11 o'clock this morning, the guy who sold 218.13s, he jumped right there. Okay. First of all, if you look at Tesla and I'll bring up the 30-minute time frame as well, you had what's called a double buy divergence. Look at this low here. Right here, okay? You got the low at 218.13. First of all, your MACD is positive from below the pivot. The MACDs are positive here, okay? I mean, they're slightly negative, but they're not making a new low, right? If you draw your horizontal line here, you can see that the horizontal line, for some reason, there it is. It did not make a new low, okay? I'm better off drawing it before I lose my mind here, okay? So not the greatest line in the world, but I'll just do it again. You can see that the MACDs did not make a new low here. All right. So this push down was a monster buy, and you ricocheted up. Look at this. 1, 2, 3, 4 bars Tesla ran on that condition, oversold into the positive MACD. There's no big selling pressure. The ADX is off. Tesla ran roughly $13, a monster pattern. And then if you look here, once Tesla reversed to buy on the 15-minute time frame, I knew that the lows were in for the day, along with so many other stocks that happened: Amazon, Microsoft, Apple, Meta, what else? AMD, the spiders, the Qs, the Russell, the diamonds, right? So when you get this pattern right here, and then you see the 30-minute time frame, the MACDs are positive like this. The ADXs are off, no big selling pressure. What can you do? You look to buy the pullbacks on the 5-minute time frame. And were they good? They were great patterns here on the 5-minute time frame on the pullback. Here's the first one, and here's the second one. Great patterns on Tesla. But if you really want to see the move of the day here, it was off the S&P futures on the 60-minute time frame. Not once, but a couple of times here. All right. So we got the first one here earlier in the morning, around 11 o'clock. You're making new lows here. S&P is traded down to the 55.54 level, and then it ricocheted right back up to 56.14. You got the deep oversold condition on the 60-minute time frame right here. And also at the time, let me just switch this over. I'm just going to show you the other, the 30-minute time frame. Okay, because when this pullback occurred on the 60, where is it? Right here. Okay, this never happened. Obviously, we're in the right here. The 30-minute MACD is the non-confirm. Okay, so if you take the MACD from here, you can see that the MACD did non-confirm on the 30-minute time frame as well. But so this was the first long. But then look at this PICASSO. Look at this. Look at this pattern here on the 60-minute time frame. And I'll narrow the look at this. You're telling me the guy who sold 55.34s, do you see this MACD here? This MACD did not confirm the low. This is an absolute PICASSO. This guy who sold at 55.34, don't ever find him. He jumped, or he's floating somewhere. Forget it. Okay? NASDAQ, the same identical pattern. The NASDAQ, I was jumping up and down like a baboon. Okay? And you talk about volatility. Volatility doesn't scare me. I've been doing this game too long. I love it. Look at this NASDAQ. Boom. Look at this NASDAQ. Okay? Probably close to 400 points here. This is insanity. That's why I tell you, and I've been saying this, okay? I'll go up against the best of them in the world, and I've worked with the best of them in the world, okay? But guess what? Here's what I'm going to tell you. All my strategies are based upon divergence patterns. That's it. Case closed, right? If you can master the art of divergences, you've mastered the art of trading. I told you about my 5 conditions: a trend, a buy reversal, sell reversal, a correlation, a disconnect. Each condition has 2 strategies. So you have 5 conditions, 10 strategies. The next most important thing, which is learning my indicators, 1, 2, 3, 4, the numbers to the right, my terminology, the strategies. And then tonight, I'm going to go over in this third segment, the most important, how to scale in and scale out of a trade. If you can master those 5 points, my indicators, the numbers to the right, the terminology, strategies, and the scaling in and scaling out, it's over. OVA. You're on your way. All right. Now, again, in the third segment, I'm going to go over the scaling in and scaling out process. It's not scientific. It's an art. And it's also, well, I'll get into it when I talk on the third segment. I don't want to really waste any more time with that right now. All right. Avago. Beautiful. Look at Avago today. Reverse to buy on the, let's do one thing at a time. We'll make this simple here. Okay. Avago, reverse to buy on the 15-minute time frame. It gapped up. So I knew that the lows of yesterday were probably going to hold. Okay. Beautiful first pullback here. Now look at this. The 30-minute reverse to buy at 10 o'clock. So what do you look to do? You buy the first pullback on the 15 right here at 10:45. I was buying this below 86.60, 87. Look at this thing. Boom. Right up there. Look at this. It's a $6 move. 1, 2, 3, 4, 5 bars. Then it pulls in again on the 15. So you had 2 good long 15-minute pullbacks. Here again, below 86 and 87.5, 88. Look what Avago did. Boom. It ran 7, actually almost 8. Okay. 1, 2, 3, 4, 5, 6, 7 bars. As I said, up to 8 bars. Okay. And then you can see the drop at the end of the day. We actually caught this short here. Okay. And now somebody asked me about going home long of Vago. And I said, And then they mentioned that the CPI number is tomorrow. I'm like, no positions. I would not look to go into any positions with the CPI number out. But again, whenever the 30-minute time frame reverses to buy, now you see when the 15 reversed to buy, and at 9:45 you have a buy reversal and a sell disconnect, right? 2 out of 3 are still negative. When the 30 reversed to buy, you have a buy here on the 30-minute time frame, which is to me the most powerful time frame. And when you get that right there, and it correlates with the 15, you buy the first pullback on the 5, and then the second pullback is on the 15. Here's the first pullback. Remember, I told you get anywhere between 2 to 3 pullbacks on a 15-minute time frame on any given day. Here's 1, and here's 2, and then beautiful, absolute Picasso. Now, Avago, okay, reversed to buy on the 60-minute time frame at the end of the day. So we'll see what transpires on Avago tomorrow with the CPI number. And hopefully, if the CPI number comes in line and the markets are tame, which I doubt, okay, and we'll have a lot of volatility no matter what. But regardless, Avago might be setting up for a long here on the 15-minute time frame coming into tomorrow. SMCI, unbelievable patterns today. SMCI reversed to buy on the end of the day on the 60. But let's look at the 30 here. We'll put the 30 here. Actually, we're going to do this. We're going to put the 15 here. Okay, the 15-minute time frame. All right, you can see here this morning, on March 11th, right here, if the 15 correlated with the 30-minute time frame. Beautiful. Look at this beautiful pullback. We got long here. I said I'd be looking to buy under the 38 level. Boom. Look what SMCI did. It rallied roughly $2 here. Again, the first pullback on the 15 into the positive MACD. The 15 correlated with the 30. You have a buy disconnect because the 16 minutes still negative. And then the 15 right here reversed to sell. Okay, now because the positive MACDs and the deep oversold condition, I said I'd take the long, a very aggressive long here, and it worked out. Even though the algorithm reversed negative, but here's what kept me in the game. On the deep oversold condition, the MACDs were positive on the 30. But also, even though the algorithm was negative, look at the MACD's positive right here. Look at the MACD's positive right here. Is this, this right here, sorry. Right here. Look at the MACD's positive on the 60. No selling pressure. If the MACDs were negative and big selling pressure, But this deep oversold, when I saw the deep oversold condition, the first thing I said to myself is, let me look at the 30 and the 60. And I see both MACDs positive, the algorithm's positive. So I said, you know what? It's a buy divergence in a disconnect. The 15's negative, the 60's negative, okay, and the 30's positive. So I said, you know what? Hell with it. I'm going to take the long here against the positive MACDs and the deep oversold condition. And boy, oh boy, was I right. Holy mackerel. And then what happened when the 15-minute time frame again reversed to buy here? And it correlates with the 30-minute right here. You can see what a long, unbelievable right here. Sorry, it's right here. Sorry. And then this is the pullback on the 30-minute. And then what you look to do, you look to see if there's any pullbacks on the 5-minute time frame. Really didn't get. This is the only one. This is the 5 correlating with the 15. All right. And this is the only real pullback that you could have got below 39.30. And you can see what happened here. SMCI up 4, still trading higher in the after hours. All right. So again, these patterns repeat themselves over and over again. I'm going to show you so many more. Let's look at Apple. Apple was nothing but a Picasso today, one after the other. Let me show you this pattern in Apple here. You see this pattern right here in Apple? All right, just throw the book at this pattern. You can see, first of all, we had the push up early in the morning. Okay, you're still negative on the 15, 30, and hourly time frames. Okay, really just looking to short bounces into the negative trend. You can see the yellow dots are still into the cayenne, very negative. Watch this pattern right here. This is an absolute Picasso. First of all, the 5-minute time frame correlated with the 15. You can see the negative MACD, the rising ADXs. Now watch this. Look at the 1140. I'm going to switch this to the 30-minute. Look at the rising ADX. So look at the negative MACD. Watch this. Okay, so now I have a rising ADX, a negative MACD on the 15 to 30. But watch this one. Here's the killer one, the 60-minute. I'm not going to go do this all over again. Right here. Boom. Look at the negative MACD, the rising ADX. What do you look to do? Right? When you have 3 rising ADXs and the negative MACDs on the big selling pressure on the 15 to 30 in the hourly, you take the first short on the 15. 1 on the 5. 1. 2. Look at the overbought readings. 3. And here's the other short off the 15. 4. And never look back. These are phenomenal patterns. Again, you take the smaller time frame. The algorithm reversed the sell on the 15 with the negative MACD, rising ADXs on the 15, 30, and hourly. You short the first bounce right here, 221.50. Never look back. Drop nearly almost 3. You take the second bounce on the oscillator number 3. Boom. Here's another short. Here's another short. Okay. Here's another short. Okay. And then this is really the push up on the 15-minute time frame at the end of the day. Getting late. You can see here's the 15 getting overbought, and Apple got absolutely caboose, 223, and dropped nearly $2.50. I'm telling you, if you put the work in and you learn from me, I'm going to help change your life. Everything I teach is all about pure technical analysis. I spent nearly 10 years of my life building this. I've worked with some of the biggest hedge funds in the world, and I've taught them this. Now it's my time to teach all of you. All right. Again, we have so many more things to show you here. It's just wild patterns. I literally can speak here for another hour and a half, but again, that's not really going to happen. But here's the thing. The 130 pattern was great. Okay, MSTR. Let me go into this MSTR. Now, MSTR is really, you can see MSTR, the 15 reverse to buy here, and it also the 30-minute reverse to buy at the end of the day right here. Okay, you see the positive MACDs here. You even see the positive MACDs early in the morning. So when we got this pushed down to 231 on MSTR, you can see here early in the morning, even though we're in a negative trend. So you can, remember I told you, you can be in a negative trend or a positive trend, and you can still have buy divergences. Well, this is exactly what I'm saying. All the MACDs, okay, all the indicator 4 on the 15, 30, and hourly were negative. That means you're in a negative trend, right, on MSTR. But then the MACDs were positive, yellow over blue, below the pivot. So when MSTR made a new low, the MACDs were positive on the 15 and 30-minute time frame. So you have a buy divergence in a negative trend. Again, I told you, one of my 5 conditions, right? So now you see MSTR pushing down here, making new lows, 231.51. It never looked back. It ran $29 off that. Okay, you can see here just the positive MACDs here. This was really maybe a little negative MACD, but okay, let's take the 15. All right, the 15 really held tight here, and then what happened was eventually the 15s reversed to buy. Now the 60s, the 30s reversed to buy. What do you look to do? You look to buy the first pullback on the 5-minute time frame, and there it is. MSTR pulled in beautifully under the 256 level, and you can see the run up of almost $6 at the towards the end of the day. So when the 30-minute time frame correlates with the 15, right? You look to buy the first pullback on the 5. Then the second pullback on the 15. If the 60-minute time frame reverses the buy and it closes and it correlates with the 30 and the 15, same pattern. You look to buy the first pullback on the 5, the second pullback on the 15, and then the third pullback on the 30-minute, and then maybe one pullback on the 60-minute. It goes in sequence. Okay. All right. All right. All right. So these patterns, like I'm showing you here, all right, are very, very just constantly just repeat themselves. I'm going to show you here the Russell, the IWMs. Again, here this is today. I'll show you the Russell at 9:45. You made new lows, and the MACDs did not confirm here on the 15. Okay, and then you got the push up down here, another push down into the, and you can see on the Russell that all three time frames were negative, but the MACDs did not confirm. This is the 130 pattern. This one just threw a dart when I was jumping up and down like a baboon. That they're making new lows here, and the MACDs are not confirming on the ETFs and on the 60-minute time frame, which I showed you earlier. But again, it's really, and if you look at the TZAs here, I'm going to show you a little strategy. When the TZAs reverse to buy right here, you see this pattern? You see the TZAs reversing to buy in the indicator 4 when the MACDs are above the pivot. I wrote this on purpose, okay? This pattern right here, when the algorithm reverses to buy, and the MACDs are above the negative above the pivot, where this went positive, you take the short on this and it dropped, boom, 60 cents. And the Russell absolutely did the inverse. Okay. So if you look at this time period right here at 10:45, as I showed you on the IWMs, you can see right here at 10:45, the MACDs are below the pivot. The algorithm reversed to buy here. Okay, you buy the first pullback on the 15, and then look what happened to the Russell. Boom, 198.77, ran almost $2 in 2, 4, 6 bars. Again, the TZAs, just to show you one more time, even though I don't really trade them, but I follow them. When the algorithm reverses to buy on indicator 4 and the MACDs are above the pivot, you take the short, you wait for the pullback. Okay, all right. And that's the complete inverse of what happened with the Russell. An unbelievable pattern here on the IWMs. Okay, so again, great pattern. Looking at the IWMs again, we'll go back at 10:45 here. Okay, this is the push up. Okay, with the TZAs, you could have caught the long. When they dropped, the TZAs, you take the short, or now you buy the Russell here, and the Russell reversed right back up. Beautiful pattern. So the TZAs were in sell mode. You buy TZAs were going to drop, which they did. The Russell here reversed, and boom, you got the push up. A great pattern there. Okay, I went over Tesla, SMCI, Apple. Great patterns in Coinbase here today. Really great patterns in Coinbase. If you look at Coinbase, on the 30-minute time frames, the 30 MACDs were positive pretty much right here, right from the get-go, once we started moving around 11 o'clock, all right? And you see the positive MACDs here. No, the ADX is off, which means no trend, no big selling pressure. So when we push down here on near the lows of the day, right, you can see that the MACDs did not confirm the low. And what happened? You had a buy divergence on the 15, a buy divergence on the 30-minute, the deep oversold condition on the 15 and the 30-minute time frame. Coinbase exploded up $12. Again, a buy. Now in this example, the 15 is bullish on indicator 4, and the 30 and the 60-minute time frames are bearish. So you have what's called a sell disconnect, right? 2 out of 3 are still negative, but however, what happened was you have what's called a buy divergence in a sell disconnect. All right. So these patterns, and I have so much more to show you. SMCI on the 15-minute time frame, Avago I showed you on the 15s. So many great patterns. We had a phenomenal day here. It was just unbelievable. I mean, seriously, between Microsoft trading as high as the 386 and then trading below the 380, 378 level early in the morning, the moves we had here, it's just unbelievable. What I always tell people each and every day is just stay focused, try to trade, 1 or 2 stocks or a continuous contract or index, and then it basically will enhance your trading, not to try to be all over the place. All right, when I get back, I'll tell you what I'm thinking for tomorrow. All right, so tomorrow, obviously, throw it all out the window. We got the 8:30 CPI number. right? We do have buy reversals on the Qs on the 15 to 30 and the hourly charts, all right? But throw it out the window. If the CPI number comes in hotter than expected, they're going to get absolutely slaughtered, okay? If the number comes in lighter than expected, all right? If they show that inflation's coming down, okay, which I doubt is going to happen. Even if it comes in like a 3.0 or a 2.9, they'll rip them 100 handles on the upside. Okay, now that's probably what could potentially happen because we're so deeply oversold. But everybody's talking about how everything's so high, food is so high, energy's come down. I paid like $2.90 for gasoline, and obviously cruise really dead in the waters here, not really doing much. But I could show you something right now, but just at 8:30 in 1 second, throw it all out the window. That CPI number is going to dictate what's going to happen tomorrow, and that's where I'm being very transparent. I'm just bluntly telling you. I could show you things that, oh yeah, if this happens, and this happens, get ready to do this and get ready to do that. No. CPI takes precedent, so clear the slate. So get ready for the CPI number tomorrow. All right. And like I said, if the number is worse, if the number comes in hotter than expected, higher, like 3.3, 3.4, 3.5, look out below. Okay, if the number comes in lighter than 3.1, they're gonna gun them, especially with the deep oversold condition. All right. When I come back, I'm going to teach you and talk to you about the most important aspects of trading, the scaling in and scaling out methodology. I'll be right back. All right. I told you that there are 5 key points that you need to learn from me outside of the 5 conditions, the 10 different strategies, the 2 strategies for each condition, my 5 key words. Put that aside. You have the 5 key points is understanding my indicators, 1, 2, 3, 4, the numbers to the right, my terminology, the strategies, and the icing on the cake. I love white cake. My mother-in-law, may she rest in peace, used to make this white cake and then take out the frosting and put the frosting on it. I'd run to make a pot of coffee. They cut the cake. I sat there just taking that cake and eating that cake with my coffee. I know it's not healthy, but it was the best thing. You could have shot me and I would have been the happiest guy in the world. I loved it, right? So this is the icing on the cake, learning how to scale in and scale out. For those of you, there is no scientific formula for this. Everybody's account size is different. So if you're trading in a stock, an index future, commodity future, Bitcoin, whatever it is, okay, there's 2 ways. There's many different ways. There's not just one way to do this. For me, I like to do what's called pyramiding. So if I'm looking to short the S&Ps, let's say I'll go 56.30 to 56.36. Maybe I'll sell 5 here, 10 here, 20 here, and 40 here. Now that's a lot. Okay, obviously the more you put in risk in the market, the more offers you have, or the more trades that you're putting in and get filled, the more risk there is, because you sold 5, then 10, and then 20, that's 35. And then let's say you do another 40 lot, you double it up, that's 65 contracts, right? So, or I can do 50, 100, 200, okay? It depends on the capital and everything like that. But pyramiding means you're just doubling up. I'm not the type of person that I like to do like 1, 1, 1, because your average price is, with the volatility, you want to try to get your average price up. Yes, by putting more contracts or shares in the market, you then have more risk adverse, okay? Now, scaling in and scaling out. So today, we were shorting the S&Ps roughly around the 36.5, got up to 40, 43. I said, stay with it. They're going to drop. So let's say some people sold, depending on your account size, whether you're trading micros or big ones, and we'll just stick with the S&Ps for now versus the individual stocks. And I'll get to that. Let's say, for example, you sold an E-mini at 37. You sold maybe 2 more at 39. And you sold, let's say, 4 more at 41. And maybe my stop was like 45.5. let's say you sell, maybe just left it alone. Okay, now your average price, let's say 37, 39, 41, you're probably at maybe 39 and 3/4, right? Now the last sale was 43. And I like to do 4 entries in volatile markets, right? But sometimes you can only get 2, sometimes you only get, or 3, sometimes you may only get 2, right? But as you're scaling into the position, and all of a sudden, boom, the S&Ps dropped 10. And I said, I would look to cover below 37, right? So now you cancel your stop above, which was 45.5, 46. You look to cover some, right? Your average price is 39 3/4. You look to cover some, and then you lower your stop to 39. And what happened? Boom, it went to 28. You could look to cover some, and then you lower your stop, okay, maybe down to like 31, all right? Boom, it pushed down to 20. And then you could look to cover them all. That's not bad, some 23 points from the highs, all right? Look to cover them all. Or you keep what some people do, they call it a runner, right? And then boom, it pushed down to 11 3/4. You could have lowered your stop to 14, and then on the way up, you got stopped out, okay? So basically, now that's a phenomenal trade. That happened at 250, that trade, right? And let's say for Avago, I said look to short Avago, I believe it was 94.95. And the high was like 95.10, 95.20. The stop was like 95.80, right? But then Avago did what? Around the same time, 255, Avago dropped to 94.5. Got down to 94.20. I said I would look to cover shorts below 94.5 in Avago, AVGO. The next bar, boom, right into the 10 bar, 93.80, 93.5. So what do you look to do? Depending on your account size, if you're doing, let's say 1,000 shares and you go 200, you go 100, you go 200, that's 3, and then maybe you go 300 or 400 shares. Maybe you want to do, maybe you only want to do 3 entries, 100, 200, or maybe you go 100, 300, that's 4, and then you go, 600, at a higher price to bring your average price up. But there's no scientific way. The one thing that I can't tell you what to do that I would never do, which I covered yesterday during the segment, is I don't like to do single lot entries. Scaling in and scaling out. Today I did a lesson with someone early in the morning, and he did not know what I meant by lower your stops. So, for example, if you're short Avago or the S&Ps at the 2:50, 3 o'clock time period, as we're short into those patterns and they're dropping, I said I would look to cover shorts and or lower your stop. So your stop in Avago at 195.80, you lower that to probably 94.80. And the S&Ps was 45.5, 46. As the S&Ps are dropping, you cancel that offer and you look to cover some of the position, whatever's left that you have, you then lower your stop to 39. And as Avago drop more, you keep just looking to cover shorts and lower your stops. Again, for the third time, there is no scientific way that this is done. Everybody's account is different. Everybody's, some people want to go for bigger moves and they have no problem with lowering the stop. And then just, letting the stop work in its favor when it bounces and they get stopped out. Some people like to cover it right away. Some people like to cover half and then lower their stop. Okay. Again, it's really up to the individual. It's up to the individual's account size. Every account is different. Okay. So scaling in and scaling out, what I would do is, paper trade, learn the scaling in and scaling out process. That really will go a long, long way. A lot of people, when they trade, they hit their goals during the day. They go to the simulator and they're practicing the scaling in and scaling out methodologies based upon the trades that we're looking at and the ranges that I'm giving throughout the day. All right. If anybody has any questions about that, you could text me at 914-500-7484. There is a video on my website, on my new website, SK Trading Live. Please subscribe to my YouTube channel, leave a comment, Join my community each and every day. I'm so happy. So many people from all around the world are coming on, and I'm so excited to teach so many people. Look, I'm doing this all day long. I had no lunch today, nothing. It was so insane. I ran to get a cup of coffee. I came back. The S&P's dropped down to 05. No, I'm down to 96 and rallied up 20 handles. And I came back. I was like, I can't believe I just missed a 20 handle rally. That's how fast the game has gotten in the last couple of weeks here, and I expect it to continue. But those of you, please join my community. I really want to help you. My legacy depends on your success. This August 1st, I'll be doing this 42 years. So please learn from me. Let me guide you. Let me help you with your mistakes. God bless you, and God bless the United States of America. Be well, everybody. See you tomorrow on The Bull, the Bear, and the Ugly.
Thanks for tuning into The Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe on YouTube at Trade Easy or on your favorite podcast platform. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.